today's episode, I am going to talk about the transformer industry. Now, a lot of people have been talking about the theme, which is transformers, and why transformers will become one of the biggest themes in the next 10 years. So today what we're going to do is we're going to identify a few companies. We're going to look at both the positives and we're going to look at the negatives and who is poised to win at what market cap. So we're going to look at all of this. By the way, none of the stocks that we will talk about today is for buying or selling. This is just research and analysis. This is fundamental analysis. So let's get into it very quickly. And what I will do is I will also give you a PPT that I have done so that you can go and read about it in your free time. Okay, so first let's look at the entire industry, which is the transformer industry, right? Now, if you look at the entire power industry in India, it is one of the biggest industries that is growing as well, because Indian power consumption and the demand for power in India has constantly kept growing. And within the next few years, Indian power requirement will grow quite drastically. Now, there is a problem with this also, right? Because today most of India's power comes from fossil fuel, basically coal-based, power that comes from coal. Now, that is one of the biggest problems. That is why India is now focusing on going towards green energy and moving away from fossil fuel-based consumptions, right? Now, because of this, what is happening is, if we are transforming the entire power industry, the power industry works in a very different way. First, we have power generation. That means there is places where power is generated. Then you have to transmit that power from one place to the other, or one place to the grid. After you transfer it to the grid, from the grid it has to go to substations, and from there it has to go to every single household, right? So the transformer industry comes in the second category, which is not creation but actually transmission of the energy. Now, if we look at more into detail where India is going in the future, you will see that India is now moving towards electricity and hydrogen, and we will see a lot of companies doing this. As you've seen, clean energy, there are so many companies coming out with solar, wind kind of energy that is coming out. And with hydrogen also, we see some players that are entering. Mainly Reliance is entering heavily into the green hydrogen space as well. So eventually in the future, we are moving towards electricity and we're moving towards hydrogen. Now, power can be generated either from coal or from electricity or from hydrogen, doesn't matter. But transformer is basically required to transfer any kind of energy from point A to point B and try to do it with as much efficiency as possible so that there is no power loss that comes into the picture. Now, let's look at some companies that are currently dealing with this entire industry. Now, the first company we will be looking at is called APAR Industry, right? Now, what does APAR Industry do? Their basic industry, what they're involved in is basically power ancillary business, conductors, specialty oils for transformer oils, and cables. So that is their main business. They're mostly B2B, they are not B2C, but now they are thinking of entering the B2C market. And as you can see, 50% of their revenue today comes from the conductor business, and transformer oil and specialty oils is almost 26%. Yes, APAR is also catering to the data center industry and will also cater to the railway industry as well. That is why APAR, if you see in the last few years, has been doing really well, right? I will talk about that as well in the next segment. Okay, now if you look at the strategic positioning of the entire company, you will see that their main hubs are in Odisha, Maharashtra and Gujarat. Now, why Odisha? Because they have a manufacturing plant set up there, which is easy to transmit and transfer all of the materials to different places as well. And because of that, their margins are quite better. Same with the oil and lubricant plant in Maharashtra, because these are all very strong port cities where they can start exporting and also giving it to a lot of companies in India, right? Now, coming to the geographical presence. Now, this company not just sells in India, but it also does a lot of exports, and 49% of their business comes from exports and 51% comes from domestic sales. So that is why the revenue potential is also very, very well balanced. So that is very good for a company that is growing in this industry, right? Now, apart from this, we will also look at a little bit more about their revenue segments. But first, let's look at what are the different business segments they have. First, we spoke about the conductor industry. Now, they are the largest player in this industry. They're one-stop solution provider, whether it's design, manufacturing, upgrading existing transmission lines, or testing the conductors across the world. And usually they have a 15% margin in this entire business that they operate in, right? And this is currently a massive growing industry in the current market. Now, talk about the business segment 2. Now, business segment 2 talks about the specialty oils and lubricant space. Again, this is the India's largest private sector manufacturer, which is there in this space, and it is the third largest transformer oil manufacturer with more than 350 different products in the specialty oil space. Now, what they do is they have 60% market share in the power and oil and 40% in the transformer distribution. That is why they have such a strong business moat that they're able to win across different segments, right? And they also keep innovating, so that gives them an added big plus point. Now, if you look at the business segment, the number 3, which is the cable industry. Now, cable industry is doing really well, mainly because they have cables for home, they have cables for railway, they have cables for data centers, and they have cables for transmission line. And these are not some normal cables, these are very high caliber cables that they currently have, right? So that is again something that they're doing really well, and the management expects 25% compounded annual growth rate for the cable industry that they're operating. Now, this image will give you a better understanding of where APAR industry comes in the value chain of the renewable space, right? So if you look at this, whether it is green energy, right, the renewable power generation, whether it is solar or wind, you will see that the solar panels, junction box, inverter, wind turbine, ground based inverter, all of this, they are also cabling. They're also giving cables to, for example, string cables, low voltage cables, torsion cables, and all of that they provide for the renewable energy space. So they get huge demand from there. After that, we talk about the transmission of power from to the substation or the grid from the energy generation companies. So over there, they do transformer oils, conductors, and all of that comes into that space, right? Then you have the power distribution, which is now distributing to the end customer. Now these are last mile distribution to our houses, which is underground cables, so they come into that space as well. So overall, top to bottom, if you look at it, APAR basically has everything that is working in their control for all the themes that are playing out in India right now. What about the conference call highlights? So we went through the conference call highlights to understand. We were focusing on the order book and the capex. Now capex is what? Capital expenditure. How much money are they putting in to increase their manufacturing unit and all of that. So currently they have an order book of approximately 6,000 crores with about 40% coming from premium products, which will give them higher margins, right? Cables usually give them a higher margins as well compared to the conductor business. Now 25% of the order book would be executed post FY25. So that means out of 6,000 crores, only 1,250 crores will be basically executed after FY25. So we can see that slowly the 6,000 crores will start adding into their business, right? And then we can see the top line, bottom line growth. Capex plans is basically 300 crores annually, which is what they're currently spending on. And conductors and cable segment will be where they spend the most amount of capex. And if you look at their financial position, the capital expenditure has been increasing since FY21, 22, 23, and their debt to equity ratio is barely negligible. It's at 0.14, so they're actually doing really well. And if you look at the con call highlights, some other problems that they were currently facing was exports to USA was less affected, mainly because there was a Red Sea crisis that is happening even now. So they were having some problem there because the mal used to reach maybe 15-20 days later. Same with US imports of cables worth $19 billion. Now US importing cables is again one of the biggest things that is happening in the entire cable industry, and APAR is currently the largest exporter to US. Polycab is number 2, and KEI is the largest in Australia. Just to give you guys what is happening in the entire space, right? So a lot of tenders are lined up, and obviously APAR is now poised to win that entire space. Now let's look at the antithesis. What is antithesis? All of this was the good things, but to be a true fundamental analysis, you have to do bad things as well. Now the problem with this company is it's working capital intensive, right? Because you need a lot of money to run this operations, and the money from the customer might get delayed on credit cycles. So that is number 1 problem, right? Number 2, the valuation is slightly stretched. We will go through the valuation separately. Number 3, they are exposed to foreign exchange fluctuation, mainly because they are exporting almost 49% of their business. So any fluctuations in the dollar INR price, they will have a problem. Also, the power demand is very cyclical. It is not something that is a constant thing right now, because the theme is going on and the government is giving tenders. That is why it's doing really well. But tomorrow, if something goes wrong, then this industry will do a complete turnaround, right? So now let me show you how the stock price looks. So APAR industry over the past has been doing almost significantly well. It has been going up and up and up since a very long time. And if I had to show you in screener, okay, so this is how it looks. It's currently sitting at a 42 PE. It was much lower than this before. Now it has been going up quite significantly. Their ROC and ROE is quite impressive. That means their capital ratios are extremely good, right? And if you look at their quarter profit and loss statements, they have been making good cash flow. They have been making good revenue after tax as well, and their EPS is also consistently growing. Same from a quarter-on-quarter perspective also, they are growing, right? If you look at the debt to equity ratio, as we said, it is negligible. It is not there as such, and the promoter holding is currently at 57, and they have very good amount of FIIs and DIIs holding stake in their company, right? Most of the mutual funds hold stake in their company as well. The public shareholding is only 11%. Now guys, I just wanted to inform you before I make any videos to be on the safer side. I don't hold any positions in any companies that I'm talking about. So I'm just going to show you my Zerodha as well. As you can see, I have exited all my positions before doing the video. So even though they're not linked to this, I have ensured. I used to have Apar Industry stocks, but I sold it yesterday itself, and I can show you in the order book as well that yesterday I sold 208 quantity of Apar. So this is purely and purely for you guys for educational purpose. Okay. Now, coming to the second company, which is CG Power. Now, CG Power is a very unique company because one, it is extremely overvalued, right? It is not very favorable when it comes to valuations, and it is flying like there is no tomorrow. Let me show you this. Look at this. It is flying. It's just flying. And if you look at the company over here as well, we'll understand a little bit more about the company. Now, CG Power is sitting at a 79 PE, right? Quite aggressively growing. I would say the valuation is a little bit stressed, not very favorable for a person to take a bet on. They don't have, it is a turnaround. As I said, they have huge amount of equity and no debt at all. But I'll tell you why the turnaround has happened. So this company was earlier a part of the Avanta group, okay, a Gautam Thapar group. Let me explain. They had two business verticals. One was Crompton Greens and the other one was the power division. Now they sold the cash rich electrical division to a PE fund that took the whole 200 crore proceeds home instead of putting it back to repay the debt. So that became a problem, and because of that, promoter had to pledge all of his holdings because of the high debt. And then after that, Gautam Thapar, there was a major fraud that happened, and the whole company fell down. Shareholders' wealth fell by 90%, and the lender of this company was Yes Bank, and the company went to National Court of Tribunal Court and NCLT. And then after that, Tube Investments acquired 57% stake in CG Power for 800 crores. Now, why Tube Investments? Because Tube Investments is actually a part of Murugappa Group. Now, Murugappa Group is one of the biggest industries, biggest players in the space that is investing in a lot of different verticals. And CG Power became the subsidiary of Tube Investments, which is also a part of Murugappa Group. Right now, if I had to show you Tube Investments over here, it is also a listed company, and you will see that Tube Investments is also a 81,000 crore company, which is constantly growing in the last 5 years like this. So very good compounders that you will see in the Murugappa Group, and basically now they have a strong backing as well. And if you see, most of the Murugappa Group companies have now started growing quite significantly, whether it's Shanti Gears, whether it's CG Power, whether it's Chola, all of these companies have started growing drastically, right? Now, why they got such a easy entry into the market is mainly because we have so many different industry growth drivers that are coming in the energy space. And what is happening is, because Tube Investments is there in the engineering space and procuring and doing equipments and everything for all the big companies, they just put CG Power inside and say, we will also do energy for you very easily, right? So what does CG Power do? They have power systems and industrial systems, out of which they have low tension motors that give up almost 50% of their revenue. And then they have power transformers, reactors, switch gears that make up for the other kind of business, right? And they are now doing aggressive capex. What do I mean by aggressive capex, right? So what they're doing is, every year they're spending heavy amount of money, and they've outlined their entire 600 crore capex for the next few years. Mind you, this company is just very fresh, very new, has been made a subsidiary, and the group is investing heavy amount of money, and they've also given what is the target date. And once the target date is done, they've also said how much revenue I can get from this particular facility. For example, a 327 crore capex in Ahmednagar and Goa will give a revenue of 3,200 crores if it operates at full capacity. So this is quite interesting, right? Now they have 9 different manufacturing plants, and I showed you what their product portfolio is, right? And if you look at their market share, the market share is going from 32, 35, 33 to now 38% as of September. So they are growing in market share with low tension AC motors, but DC motors, they're going down, right? So this is what is happening in this space. And even the fractional horsepower motors, they're increasing their market share to almost 36%. So a lot of key moves are happening in this space. And because they have a very strong client base with all the biggest companies, they are making good margins and they are making good revenue from this, right? Now, they also are in the railway space. As you see, even Apar was in the railway space. Now, CG Power is also in the railway space. Now, railway is also the buzzword of the market. So, anytime anything comes in the railway space, these guys come into it. So, there is sales growth happening. There is a huge amount of order book that is pending, which is around 1,000 crores. And they are focusing on these key business opportunities of 100% electrification of railway and transport and all of these themes, right? So, all of these themes fit for CG Power, and that is what they are currently targeting for. Their second business segment is the power industry, which is what we were were talking about, which is the transformer industry and distribution industry. Now this is again very important because you need to understand the types of transformers and the switch gears that people currently have. So this one has a transformer, power transformer and reactor, distributor transformer, and you see how their market share has gone from 3.7 to 6.4. And they face, Indian players obviously face a huge competition from the international MNC players like Schneider Electric, ABB, Siemens and all of that. But India is now currently moving towards getting market share in this space, and everyone is focusing on this right now, right? And they have an unexecuted order book of approximately 34% year on year to 5,500 crores. So this is something that will add into their top line, and they are going to target 25% growth in the transformer and switchgear business, right? Now, expectation is that in the next year they will improve their revenues, they will ensure that the results come out well, and their current capacity utilization is at 75%, and they plan to grow even further after that, right? Now let's look at the antithesis. Again, cyclical sector, execution risk, because they have a huge order book that is not executed. They are currently trading at almost 70p. I think by the time I did this video the PE readjusted, but they are facing a lot of competition from the MNCs as well. And if you look at the stock price I showed you, and if you look at CG Power here, right, coming down, if I show you the quarterly results, it is also, I would not say extremely stable, but the margins are stable, but other income is very uneven and all of that, right? But people are not banking on today's revenue, people are banking on the future revenue of this company, saying that this will become a potential multi-bagger in the future. So these are the two big companies, okay? There are more companies that I would like to talk about, but today what I'm going to do in this episode, we are only talking about the two big major companies that are there currently in the entire transformer space. Now, what I will do after this in the next episode, I will make this like a two-part series because I want you guys to learn fast and not get saturation. So in the next episode, I will talk about three more companies, which is KEC, TRIL and Shilchar, and it is very interesting to look at their things. They are not as big as these two guys. They are quite small compared to these two mega players, but they have some interesting history with themselves as well, right? So I need to show you who's leading with what, who has a unique advantage where, and by then we will understand the entire transformer industry, right? Now again guys, this is only for educational purposes. This is not a buy or sell recommendation, so please don't go into that loop and put me into trouble. I'm only here to educate you on a very fair practice basis, so that is what I'm doing, okay? So that's it guys, my name is Shashank Udupa, and I hope you guys like this video. And if you want me to do another video with the remaining three stocks, just comment below and tell me we want the second video as well, then I will immediately do the second video. If you guys are interested, let me know in the comment section below. Until then, like, share and subscribe. Thank you guys, take care, see you guys, bye.